panel number 5, which talks about the topic Business Transformation Navigating with Hybrid Intelligence CEO session. I take this opportunity and would like to welcome once again Mr. Manoj Agrawal, Group Editor, Banking Frontiers. He is the moderator for this panel. Let's give him a round of applause, everyone.
I have a very sitting job, so I think I'm enjoying standing here. Also standing here gives me a good view of the audience and the panels, like a 360-degree view of the conference. So friends, this is our final panel for the day. The topic is business transformation.
Hello.
And the topic is very valid and very important because for the NBFC sector in India, transformation is happening at a hectic pace. And the holistic part of that is business transformation. So there's technology transformation, there is people transformation, there is process transformation, there's compliance transformation, and all those transformations, but you put them all together, that's business transformation. And that's why this topic is deserving of a CEO panel. Apart from the regular panelists, I have the pleasure today of having Narendra sir, former Managing Director of Indian Overseas Bank. He's also a member of the jury committee for the NBFC Awards. So is Jiji, Mammen. So friends, what I'd like to open with is a simple question. There's a lot of transformation happening, and there's a lot of innovation happening. The question is, what is the cause and what is the effect? Who is the driver and who is the passenger? And there may not be one answer, there may be different. In different scenarios, it may be innovation driving transformation. And in some scenarios, it may be transformation driving innovation. So in your experience, what do you see? In what kind of use cases do you see transformation driving innovation? Which means maybe it's top-down driven. And in what cases do you see innovation driving transformation, which might be an example of bottom-to-up innovation? Your experiences, your observations. Maybe Bonani, we can start with you.
Thank you so much, Manoj, and thanks for the invite. Pleasure to be here. So I represent Nabsamruddhi, a subsidiary of NABARD, NBFC, mostly into wholesale lending, but extremely impact-focused. So what we have seen is that, of course, innovation does drive transformation, no doubt about it.
Okay.
And I think that would be a very common answer that anybody would expect, that there's so much of innovation, it's totally disrupting the financial ecosystem, and it is inducing transformation in a way everywhere, the way we do business, the way business is happening at the field level, the way it has totally transformed the entire scene there. But when we look at the other side also, it's equally true, because we have seen in 2-3 aspects or scenarios where it's been the other way around. One is when you reposition yourselves for whatever reason. When we reposition, that kind of transformation induces innovation. You have to become very innovative, bring in lot of changes, and then you ask for the innovation. That if I'm totally a different organization today, I can't continue to do things the way I've been doing. I will need innovation in systems, processes, products, every which way. Secondly, if the regulator expects a change from you, we have seen the scale-based regulations happening. So that kind of change, when suddenly you have to deal with ICAP, suddenly, you are pushed into a lot of regulatory stringency. You have to look at innovation, because if you continue with the same way you were doing business, it's very difficult to cope up. And the third we have felt was climate change, which was induced, which was actually imposed, because nobody expected the impact that we are feeling today. We can see heat waves affecting the business of microfinance institutions. We have seen heads of MFI saying that heat waves have affected our credit costs. So you have to then buck up, because whether it's mitigation, we think that is the government's call. It's not, because all of us are, we have to own it up. So while mitigation happens and it takes time, climate change is anyway upon us. So we have to adapt. And to adapt, that is where we really need to induce the innovation, and we have done that actually right now. You would know that we are working in the climate ready wash space, and we are looking at startups, at tech companies to come up with newer innovations to cater to climate resilience in the water and sanitation sector, because without that, the sector cannot sustain, and without water and sanitation, which are basic needs, again, the financial sector itself cannot sustain. So these have been our experiences. Thank you.
That's interesting that the innovation has to look at such a very basic thing like water and sanitation, because these are kind of things that we take for granted. But there again, we have to apply our intellectual and our mental capabilities.
We cannot continue with the generic solutions. That's what with floods, droughts, cyclones, sea level rising, salination, with all of that, we cannot, and heat waves, we cannot carry on with the same generic solutions we had. We have to innovate, and there is a lot of innovation happening. We are asking for it and financing it, supporting it with blended finance. So that's how it is.
Who would like to go next?
Yeah. So whether innovation or business transformation will have to be keeping in view the customers. The customer's value proposition, customers' value drivers, customers' delight. So keeping in view the customer in mind and their aspiration, their current changing dynamics in terms of their ease of doing business, or in terms of their, how quickly you deliver, or how you will be able to innovate the products which can take care of the requirements. So in terms of the customer in mind, there will be a lot of innovation. It can be a technological innovation, it can be a product innovation, it can be a process innovation, and it can be even in terms of the delivery innovation. There can be so many MIS and other things can be implemented, and keeping in view the business gets transformed. But for all that, there must be ownership. Without the ownership of those innovation, or without the ownership of and the commitment to make it successful, just for the sake of any business transformation will not sustain long. So it has to be in line with the short-term, medium and long-term vision and the mission and the goal of the organization, and in terms of their core as well as core value, core purpose and core enhancement. See, all the visionary companies earlier, the built to last book ka pada to udhar malum padega. Like, say for example, man never thought that they will land on the moon, but they could land on the moon. That's where there has been that big, hairy, audacious goal. So once the goal looks very daring, and it is the human normal prudence says that it is not reachable, but with the will and the commitment and the core commitment, it could be reached. That's why today you find so many miracles happening due to the innovativeness of their country or the people around. And sometimes the country may be very small, but in terms of technology and in terms of the superiority of this, they may be controlling the whole world. And without them, nobody can achieve their desired objectives. So, any part of the organization or any part of there will be somebody, that is where we have valid suggestions being taken in the organization. And these suggestions are given to the suggestion committee, and whenever that suggestion get into a innovativeness and the positive financial and the customer impact, that's where even in your the award and all, we are more on the impact aspect. As the madam said that today, sustainability and regarding the eco system for climate risk management, climate mitigation and climate adoption, that has become part and parcel. So any organization which doesn't do something innovatively and make the organization transformation to see that we don't add to the carbon emission, but we take care of that in terms of, that is very important because our sustainability on a long term is based on that. So as you rightly said, water conservation or even in terms of the, the quality of the drinking water, waste management, then land degradation which has to be. So in terms of that, every organization today has to be in line with the societal expectation, and if they do something in that, those innovations are also valued much, much higher than the financial innovation and other things which they do. Because customers will now futuristically will deal with such organizations who are very sensitive to these aspects of that.
Yes.
And they will get, even in equity raising or fundraising, much better proposition. Thank you.
Thank you, Narendra sir. I liked one concept you introduced, that while innovation and transformation, we talk of two different things. If you put them together, you get a miracle, like putting a human being on the moon or some big, hairy, audacious goals. So that's very interesting. Transformation plus innovation equals miracle. And literally, if you go back to what Bonani ma'am said, we need miracle. There are so many areas. We don't need just innovation, just transformation. We need a miracle, which is the need of the hour. Thank you so much for that insight. Jiji, would you like to comment on this?
Thank you, Manoj, and thank you so much for inviting me for this panel. It's always a pleasure to be part of Banking Frontiers events. I am representing microfinance institutions. Basically, Sa-Dhan is an association of microfinance institutions, as also a self-regulatory organization designated by Reserve Bank of India. In microfinance sector, innovations leading to transformation and transformation leading to innovation, both are happening in some way or other. But more of transformation leading to innovation is what we have been seeing. I'll give you a couple of examples. In 2010, when there was a huge crisis in the sector, when Andhra Pradesh, there was an issue which led to a major crisis, commonly known as Andhra crisis. The sector was in deep doldrums. There is a time then they thought about how to understand, how to know about the liabilities of the person, because the major issue was because of the higher credit indebtedness on the people, leading to problems. That's how when the credit bureau mechanism started.
Mm-hmm.
Once the credit bureau mechanism started, or it was introduced, that led to a larger business growth in the sector. That is number one. Number two, in 2016, when demonetization has taken place, that was another setback which the sector had. Because basically the microfinance institutions, microfinance sector itself was dealing in cash only. It was entirely 100% cash in, cash out business. That is a time when the sector thought about how to avoid dealing in cash. And then the digital mode of transfer of money through the banking accounts was introduced. So since 2016, you find that almost all 100% of the microfinance loans are disbursed by the digital mode through the bank accounts only. And of course, that further helped in enhancing the business. Again, in COVID came, that is a time when the transaction itself or the meeting itself became a difficult proposition.
Right.
That is a time when both collection as well as disbursement as well as collection was made in the digital mode. So what I was trying to say is that, of course, whenever there was a crisis, that crisis was taken as an opportunity for innovations or bringing newer process, and that definitely helped the business in microfinance to grow. So more of transformation leading to innovation is what we have seen. But I have also other examples. For example, I'll tell you, after the COVID impact, when the group mechanism itself got diluted, people started thinking about how to keep the group mechanism intact. So, without having to come together, then some of the MFIs started even digital means of meeting the people through the WhatsApp group and all. So I'm saying that that kind of process also is there, but then more of the digital, the transformation leading to the innovation is what we have seen in the sector.
Okay, interesting. So Jiji, one of the things I could take from what you said is that when an individual does something different, it's innovation, or a small team. But when a complete organization or a set of organizations, like the whole sector does something, we call it transformation.
Maybe
And it
that
is
way
driven
also,
by
yeah.
a black swan or a white swan or whatever.
That way also you can tell it's a entire sector is adopting a new mechanism.
Yes.
Means it's a transformation of the process itself.
Correct. Like that example of credit ratings.
Yes.
Which were induced by the Andhra crisis.
Yes.
Right. Interesting. Ganesh, what is your take on transformation and innovation and their correlation?
I guess the business luminaries have already spoken about much of from a business standpoint. I'd probably summarize it in maybe few lines, in the interest of time. I'd look at it at the top of the layer, the top of the pyramid. I would say customers and crisis are the two important criteria that lead to innovation and business transformation. Because if you've seen the last 5 years, it's both customers and crisis has led to a lot of innovation and transformation across various businesses, across sectors.
Right.
And under that pyramid is where technology layer comes in, because you can write as much of innovation. And in fact, Sir mentioned about how, as people have landed on the moon. Now, obviously, technology is the backbone on the top of which these innovations and transformation happen. So I guess the value chain across the pyramid has to function in a seamless, synchronous fashion in order for the benefit to finally accrue back to the customer, or for the business to be able to manage the crisis in a very efficient way. So at the end of the day, if you don't get customer experience, that's not going to help. If we don't manage the crisis well, like for example, COVID, right? Moratorium became a crisis for all lenders, right? And the regulator came back with a guideline on the same, and that had to get managed at a micro level, right? From corporate lenders to retail to MFI lenders, all of them had to undergo this. And that became a business transformation, right? Because the technology had to get enabled in order to manage this, especially someone running, 50,000 crores, 100,000 crores of AUM. You have even, 10% of them running this moratorium. You're running a huge book of, NPA straddled under your belt. So both customers and crisis lead to innovation and transformation, backed by technology to fulfill the entire value chain.
So it's a loop the way you're describing it. Okay, that's interesting. One interesting observation I have for all these years that, for example, in 90s, 70s, 80s, banks started doing core banking and treasury automation and all that. All this technology transformation, there was a lot of resistance. These days I hear people saying that the youngsters, they're using AI. Whether you want it or not, they're going to use AI to write an email, to solve a problem, to analyze a problem, do whatever it is. Even if sometimes that AI gives weird outcomes or hallucinations or unrealistic output. So I see a 180-degree transformation from a generation which resisted use of technology to a generation that can't do without technology, even if the technology has some negative impacts. Correct? I'm sure individually you would have seen that today, you take a 10, 15-year-old kid, ask them to do something without their phone or without the computer, literally they are helpless. Right? So there's that technology dependence which has come up. Not technology addiction, if I may use the word, okay, dependence. But technology is the first choice rather than a plan B or a plan C. So going forward, how do you see this kind of technology first approach at the individual level? Okay, for a big problem, we'll have a meeting. There'll be a boardroom meeting or a team meeting or something and deliberations. So that's where the human intelligence is being used. But for many small problems, we're just completely leaving it to an Excel or an AI or a Google search. If Google search says this is the solution to the problem, you literally do that first and then worry about whether it is right or wrong, or many small things. So, now being employees and talent being a key resource for any organization, if there is that rush, blind rush towards adoption of some of these modern tools, what do you see as the impact, as the risk, as some kind of countermeasure that organizations need to take so that there is sanity in the overall outcome? Especially when you have very highly tech-savvy employee workforce, which could be happening in some of the very tech-savvy NBFCs. Yeah, please. Use the mic.
I would use an example here that we had asked our team, the data analytics team, to come up with a peer comparison module, which was on Python, and they had developed and they were actually presenting it with a lot of confidence. It was a good effort. But when they were asked that why this happened from this to this, the first answer was, I don't know. So the chief asked, then who knows? So they said, Python knows. So this is the danger that can happen. There is an over-dependence and they are sure Python is right, but it's always about ego, we always knew. One more thing that happens is that if there is no cleansing, then it is always about that only, what goes in. And I think the third thing that we see is that on an individual level, I can take risks with my life, right? I can use anything. In fact, doctors always tell us, don't go to Google for your diagnosis or prognosis. Yes. But we still do that. But for that, my ownership is to myself. I'm answerable only to myself. But in an organization, it's not so. We are all responsible or answerable to the organization. And in that, there has to be a kind of answerability there, and there has to be that control, so that there is a hybrid intelligence that takes over. AI is a great tool. We cannot do without that. I again repeat, we cannot do without AI. We cannot do without technology. But there has to be an overlay of the human intelligence, especially where things are very different, where there is a black swan event, for example. AI will not have the answers because it's never even known about that the data does not exist as such. But yes, there has to be a kind of risk mitigation, like you said. The risk from whatever is the risk has to be managed. And that's why there has to be a balance between the two. So hybrid is the answer. Sorry, sir.
So hybrid brings in the balance. Yeah, that makes a lot of sense.
Agrawal ji, ये आपने सुना होगा Reliance Industries, in the 1 year period, they removed 40,000 people. Instead of recruiting more people, 40,000 लोगों को ये जब आपने देखा होगा पेपर में आया.
I heard about it.
So that means some of your efficiencies or specialization, what you think, and that had given you a supremacy in an organization for quite a long time, that will become redundant. Because somebody else, through the human technology only, human mind only, has been given all the directions in the artificial intelligence. So it takes quite a lot of work from the organization or wherever required, even in HR, whichever minor related or what you call mechanical work, all that in HR also will be done. But HR intervention in terms of creating and building a sustainable human capital, there the HR people will have the lot of role, which has to be by their own individual creativity and certain recognition, rewards, competence mapping, or in mentoring, all that, technology will give you a supporting hand, but you have to get involved. Same way in the finance sector, finance management, all that. Now, how do you manage the funds in such a way that in efficiently and get a better return on capital and better return to the investors or shareholders? Those things will have to be, along with the technology, you have to go. So in any organization, these two combination, and as you rightly said, today nobody has the time. Suppose if somebody wants to do one service at the NBFC or even anywhere, nobody has the time and energy that no, it will take this own time, that time, this time, nothing. Because whatever felt need has to be fulfilled today only. So in that respect, whether it is a automobile supplier, whether it is a agricultural credit, in everywhere, the banks have already used technology. During COVID, State Bank of India could release all the ad hoc credit all through the and nobody was to come to that and all, documentation, everything. And today that has become most of the public sector. Baile bola tha only private sector, no. Public sector also is adapting. Yes. But as along with that, as he said, the cyber security, then data privacy, data that protection, all that, and customer secrecy protection, the data should not be breached. आज के दिन में ये सब बहुत security. So you cannot be blindly depend on technology. There also you have to have a check and balance. Because sometimes if you in an artificial intelligence, whatever you have fed or the type of question you will ask to the artificial intelligence, that also has to be intelligent.
Yes,
Unless you are intelligent, you ask question, what the outcome will come, all will be wrong. कल तो उसको ऊपर आपने आपका बॉस को कुछ भेजा तो वो तो आपको बाद में सीधा ऑफिस से निकलेगा. Because that is where your even Google में आप if you want a particular information, the way in which you will ask, that will throw. Otherwise, lot of other things are which are all not relevant to you.
Correct.
This is the intelligence. Human intelligence cannot be replaced by any technology. So even in the artificial intelligence, the program has been developed by so many people who are developing the artificial intelligence with a type of certain, because these are all developed internationally, not domestically here. अभी हमारा में अभी तक आया नहीं. So the international को हम adopt करके हमारा intelligence से properly उससे benefit लेना, product outcome लेना, that again we have to develop, and that's where the training and other your development is needed. So with that, आपने correctly बताया, the young generation, even in terms of knowledge creation, even in terms of skilling, in terms of their requirement feeling, or in every area, they know how to utilize the latest technology. And at the same time, sometimes they become so much in that, they forget that there are other areas also to get knowledge. So it has to be a combination of all that, so that, but those who are first, who have not innovated and changed in the changing time, then it may so happen, we will be only a reference. Whenever they want us, they will come, but you will not be in the participation. You have to be participating. You cannot be merely observer.
Right.
So in the changing period, we should also be able to vibrantly participate. That's where we have to get adapted.
Sounds good, sir. Ganesh, I want to come to you with a thought that Bonani said about Python knows. Now, as a tech organization where there's tons and tons of Python and all kinds of technologies, does the organization see it as a challenge or as an opportunity that Python or something knows, and they're confident about what it knows?
Yeah, so from a tech standpoint, obviously we deploy our tech architecture on a platform that's not just scalable, but where we know that the tech resources that we will utilize, not just for deploying the current application, but at a scale that's say for the next 5, 7, 10 years, is something that we carefully choose. So we have to be very sure of the tech platform that we build our tech product on, which necessarily needs to be both scalable and then the resources availability over the next few years. Because today, that is a problem. Skills is a major issue. to in fact address the point made by both of them. Tech is an enabler, but what's happening today is that many of the large financial services companies, not banks essentially, but say the fintechs and the NBF and many of the upcoming large NBFCs were scaling up big time. They depend so much on technology, and their dependency on technology is so immense that without naming the company, I can say there's a 20,000 crore company that's designed to function in such a way that they don't want to have more than 400 people in their ops team.
Wow.
Right? So now that's a critical mass. They don't want to exceed that number because they believe everything else will suffer, including their ROI, return to shareholders, and so on and so forth, if they exceed that. So, which necessarily means that all the the mundane work or the general work that used to happen, say 20 years or even 10 years or 5 years before, is today being done through technology, right? Today, if you went to a bank, right, and you have a housing loan, and you want a statement of account once you've done a part prepayment, it will probably still take you maybe a couple of days to get that statement of account, and you necessarily have to go to the bank branch. These days, you make a part prepayment, you get your statement of account, a revised statement of account with your repayment schedule in the next 3 hours.
Right.
So that's where the technology, and mind you, you needed an army of people, if you are a large housing finance institution, to manage that particular service layer, right? For statement of account and other customer services.
Right.
Now all that is on a self-service portal,
Self-service.
and you don't need those people. So your regular, mundane, operative work is being replaced by technology, which is, by the way, a boon and a bane, because a boon for institutions who are focused on both return to shareholders and blah, blah, blah. On the other side, it creates a huge area of disappointment for youngsters who are, say, wanting to have a career in financial services, say in operations, but they're not trained on, say, more domain-oriented work and more general management work, which may not sustain for the long term. So there is a bane and a boon on both sides. So therefore, the skillful need of the younger lot of people who are trained in technology but not trained on the domain may be it's a chicken and egg story. So
Okay. So that's where the conundrum lies. Jiji, if I may come to you, if you can comment on the microfinance sector, how do they're yes, going on the digital bandwagon, but it's a sector that's very operationally intensive. And as we have seen so far from the discussion, that operations is where technology is eliminating a lot of jobs. How does the microfinance sector see its evolution in terms of the impact of technology? What has been an enabler so far? Will that become a transformer? Are they looking at more of AI? Are they looking at more of blockchain? What is the sense you are getting from the microfinance sector? What is it that they're optimistic about?
Microfinance sector, as you know, it's a highly human-intensive sector. In fact, the sector employs more than 2.5 lakh of people in the country. And most of the operations it used to be entirely physically done. People used to go to the villages, have a meeting of the members, of the prospective members, explain about the product, then they are given training, then they are, the applicants are onboarded. So these are all done physically. So there is a lot of scope as far as technological intervention is concerned, so that the cost of operations can be brought down. But then, of course, I do take that point that more technology means there will be less employment opportunity. But then, if the sector has to really become more operationally efficient, more technology needs to be has to be imparted. There are a lot of areas where technology has come into fielding. For example, Earlier, entire application used to be taken in a physical form, but now everything, most of the microfinance institutions does the borrower onboarding through the digital mode by using a tab or even a mobile.
Okay.
Secondly, as I said, after the AP crisis, that credit bureau came. So credit bureau check is a very, very handy instrument as far as appraisal is concerned. Then and there, by a click of button, they are able to know whether the borrower is having any kind of defaults, any kind of what is his credit histories. Immediately you can get at least whatever information collected on a credit bureau, that information immediately get popped up because of the technology.
Yeah.
Thirdly, the documentation part, that used to be a major work but in many of the MFIs still continues to be physical, but many have adopted the technological part, like companies like Legality and all have come and helped in the digitized documentation, which also helps in identification, the proper identification of the borrower. eKYC is another area which has really come in very handy as far as the loan identification is concerned. So many times the problem which the MFI faces is the fraudulent applicants. Somebody who has some 4 or 5 other cards. There are people with 4, 5, 6 other cards. They go to different companies and take borrow. But if you have at least, if you can do that eKYC mode of verification, it helps in a lot of elimination of these fraudulent borrowers. So that has come in quite handy as far as. And
can I ask you to kind of give a perspective? How much cost reduction has happened, and to what extent does that get passed on to the borrower? Is the borrower better off in terms of getting a lower cost of loan?
See, I am not very sure much cost reduction has happened in this process, because still a human intervention is still there. Even if only thing is that his efficiency has increased, maybe the one who was handling 200 or 300 cases now is in a position to handle maybe 300 cases or 400 cases. That way efficiency has improved or some kind of. Otherwise, the process still continues to be the same. And each and every check, like each KYC check, there will be some cost involved. Like documentation, there will be some cost involved. So cost reduction, I am not very sure it has really happened, but efficiency has improved definitely. And there is still possibility of more intervention possible, especially using AI or blockchain technology. You can, if you can get a much more better analysis of a prospective borrower. He's taking into account of the other transactions he or she has. If you can make an assessment about how the borrower would behave, his behavioral pattern, if it can be, that could be one areas where I think the future of MFI is there. Let me tell you, there is a need to change the whole process also. There is more innovation is needed, because that generation has changed, as we rightly said. The older generation who started MFI in the late 90s and early 2000s, they were prepared to go to a village, stay in the village, spend time and all. But the present generation doesn't have time for that. They are more aspirational, and they want time for themselves. They want time for their own personal things, they want their own individual entertainment, whatever it is. So the whole process needs to be changed. Probably more of technological intervention by bringing the newer technological advancement that can.
Do you see a lot of collaboration between MFIs and fintechs?
There are fintechs collaboration. The one Legality is one such collaboration. See, there are many of the MFIs are not in a position to go for the eKYC because they are not authorized to do that, because unless you have a AU, so they go through the third-party means. Similarly, documentation is done through a third-party means. So there is a possibility of fintech collaboration, at least in certain areas.
Okay, there are still limitations.
Yeah.
Narendra, sir.
Microfinance institution on their own, they cannot spend so much on technology. Their capital level no, is not so high as compared to banks or NBFC.
Right.
So they have to be cost effective, and that is where they are, as he rightly said, because far away, such a distance, they are not so educated also to use the latest technology. But the tools can be like pehle, that for the people at the faraway BCCs are using. That type of instruments and all already there, which that necessitates them to get, and so many people have now. But their sector per se is a very tribal, or maybe so many remotest village and all, because otherwise there are RRBs, there are regional level land, what you call the local
DCCBs.
development banks, then other NBFCs and the banks, all that. They have to have a specific category for themselves. And the margin may be at least 10 to 11% or more than that. 12% margin है उनका. So
That should also cover the OPEX.
OPEX
The
is
margin which you are talking about, it's a financial margin. It's not the net margin.
Actual margin.
Because you need to have OPEX of 7 to 8%.
Right.
Then you have a margin should be there. There should be a risk premium should be there. Then their actual margin, return on asset, has to be around 3 to 4%. Then only each sector can really.
Definitely, totally agree. Credit costs are very high because it's a segment of the society where risks are higher, not just perceived risk. And when we look at other NBFCs who go for straight through processing where they have not even seen the borrower, they go by whatever the BRE is into their LOS, it's possible, but there also we are seeing a lot of cash burn. But this is something MFIs cannot afford because we are dealing with the segment with whom we cannot take a chance. They are marginalized, they are very vulnerable. And there, your question again, where we put the human layer, where it comes to assessing microfinance clients or even deciding on their loan, when to take it back, there is a kind of a unspoken group guarantee also that comes in. And that is where the credit officer needs to know who is the person and who are the group members. And that is where the human intelligence or emotional intelligence also comes in terms of ethical judgment. Then your actually bias, there's a lot of AI which, there can be a bias in AI as well.
Yeah.
So that bias gets removed when you actually see what is the circumstance of your borrower and you think, okay, they are into this, so we can at least delay a repayment EMI and somebody else can come into that. All those things, CGT, GRT that sir was talking about, it's about that only. The kind of ethical judgment, the kind of sensitivity to the borrower that AI as of today,
So
I
there is
don't
a
know
good
about
amount
tomorrow.
of subjectivity even now,
Yes, and
which
yes.
AI cannot handle. Right. So time's up.